Low. Oh, wait. Hello, how's it? Greetings everyone. Should have started video. Okay. Okay, let me just mute the share screen.
Quarter past 6. I'm gonna get invite. If I'm gonna meeting it, chef.
Okay. Yo, okay. New share. Let's go over this. Yeah. How is it going, guys? Are you guys good? If you can hear, if you can see my screen and you can hear my voice, please go and write on the chat box that you are in. Write on the chat box, you know where it says chat. Go there and just write I'm in. If you can see, if it was a bonus screen sami and it was in Kulumayo, you can go to the chat box and just type I am in. Basically, and also I wanted to touch on the in terms of reading price action. So first thing obviously is, let me just get on that. Okay. Yeah, I think Ilana. Sure. Okay. Basically, okay, when it comes to trader price action, first is being able to read price action. Okay. The reason to read price action is because market, number one, in order to trade, to be able to trade the market, you need to be able to understand why a price is where it is and where it will go next. And the base of, obviously, the best indicator is the price itself. Yeah, and then basically is a higher time frame. Ayasiza nabo, because that's where we zoom out and literally can see what's the price. We study what's in the past, and then the price, and we're gonna predict what's in the future. Price that's basically it. And then obviously is reading the price action also, which was the best decision made, clean supply and demand, zone, was the zone compressed or what, and then obviously going to my thing was spotting a high probability trade. So for example, in supply and demand trading, obviously we buy at the demand and we sell at supply. In supply and demand, we have components. Some components is in the price. So just to you've got rally based rally, rally based drop, drop based drop. This is just in my components. Now, so understand you've got Quasimodo as a component. We've got EFCR as a component. Significant support and resistance is whereby resistance is a couple of times where the price is touching a level a couple of times. There's also a decision point, is where the price actually made the change, which means it's where you actually saw the change of the price. Okay, so basically that means you saw what the price was doing, rally based rally, Quasimodo, and maximum pain level is very important. Where you see the actual change in the price, and then you've got decision point. Decision point is where there was an actual change in the price, where the price has been moving in a certain direction and suddenly, and the price suddenly changed. Okay, price action. What is the price doing? Is it moving towards supply or demand? What is the price doing? Is the price compression? You see a compression or diamond. So those are some of the things that are important. Okay, so the 5 components, we use them to spot our sell zone and buy zone. the second component is basically wisdom for confirmation. Confirmation, let the confirm are we gonna buy, are we gonna sell, is there an entry or everything under that. But basically, that's basically the most few things. So what did I say? First thing I said, we need to look at these components. So these components, we use them to support what? Our demand and supply zone, okay? So just to explain them a bit so that you know what we're talking about. We're talking about these. We are talking about these levels. So this is rally based drop. When the price rally based drop and drop based rally, they help us identify the buy zone, the sell zone, the demand zone, and the supply zone. Okay, and this is what drop based drop, and this is rally based rally. These are some of the important key levels that help us actually understand to mark our supply zone and our demand zone. Okay, what I will do, obviously, before we finish off the session, I'll give you guys cards whereby you can ask questions about, because that's very important. Because most of the things we talk about when we're doing the session, sizozenza are my examples, because that's basically what is important, is do examples. Okay, for example, another thing that we can do, obviously, is take a look at what the charts are doing. So for example, I think the last signal that I sent, I think it was a nasdaq. So nasdaq behaved very good. Okay, so what I mean, we can say control Y, give us a bit of a picture. If you can see here, nasdaq obviously has been moving up. So when I say moving up, you can see from there, it's like this. Okay, let me just remove that control Y. Let's just remove all of that so we can have a clear chart. So as you guys can see, nasdaq, this was our previous. So in this level, for example, here, I think that was a good signal. Okay, so what happened is here, the price, just move that, as you guys can see. So let's just mark, this is a very nice market structure. Which is, I think we've got this thing. Fibonacci. Okay, what do we have here? We're gonna zoom out using okay, zoom out. This is a daily chart. Okay, from here, okay, which as you can see, okay, nasdaq has been moving massive, but now as you can see, the nasdaq has compression. That simple means we are about to experience like a certain drop somewhere. Okay, but otherwise, let's go into what I wanted us to focus on tonight. Just delete that. Zoom in, zoom in, zoom in. Okay, my focus tonight was not that. This was this. Okay, you saw, oh, it's okay. Firstly, what happened is this is the market actually created this high, just so much, and now you saw that one over there. So I'm gonna mark these as a high, and so this is a high. The market came back, created this low over here. Okay. What I want you to note is that this is the high, market came back. This is the high, market came back. Okay. So the market keeps breaking this high. So this was another high here. Okay. So another high here, previous high. Okay. The market keep breaking this highs. So what that means, pushing to the market is actually moving up. Okay. Okay. But now we need to check where is the change happening. The decision for the price, as you can see, as much as the market is like here moving up like this, is moving up, the price come back, breaking that high. Then we just write H on those highs. H, I don't like wasting these cards because I know Okay, high. Okay, let's just use this to mark those eyes, because sometimes, you know. So this is a high, and that's basically another high over there, and that's basically another low over there. Because I want you to notice something. Okay, and that's basically another low. This point of the market reach. Okay. Okay. And I'm gonna mark that there. And basically another high. Okay. I think it's a bit clear. Okay. So the market came back here. This was a high, and it broke a level. So this level was broken. This level here was broken, and the market actually came back from there to there. I'm gonna use that. So the market left this level, break a level. So this here is a clear break. So out here, the market broke this level, which was this high over there, broke that level over there, went up, went up, went up. As you can see, there was a little bit of what? This here is what people call it a little bit of compression. So what happens here that obviously the bankers are taking what? Profits. They're taking profits, and the market came back here. Where did it come back? Came back to almost similar level. If you zoom in here at that level over there, you see that there was what we call a flag limits. Flag limits over there. So the markets touched that level over there. Flag limit, which is over there. The market Yakupuga went up. As you can see, that was a high. Came back with a big candle. Remember, these big candles are very obviously they're caused because the market is able to sell in position. So that when the market dropped up to this level, understand before the banks start buying over again, they need to retail traders start selling. Okay, so there was this bullish movement from here to there, and then obviously there were these bought, and then there was this huge drop. This drop is retesting this level over here, and then the price went up. Okay, price went up to that level over there, from here to there. Okay, now we're moving, and now we're going to a deeper level, as you can see that. So what is important here is understand the price came back to that level. What is that level? It's the original cause of that bullish move. Okay, the original cause of that move, as you can see. And it's just that sometimes, you know, and you can see that that original move was caused by that thing over there, which was, let me just show you, that's over here. This came back here, okay, for that. This came back here for that. And obviously this movement obviously was the cause of the market makers wanted to take out those traders over there. When I say take them out, I mean take out their stop losses, okay? Because some people will have their, because of this, they have their stop losses somewhere here. So if you got a stop loss here, obviously they want to take them out so that they will bank on them, and then the price eventually just went up, and then after going up eventually it's just broke that level. Okay, so what I want to talk about tonight is simple, is zooming in on a higher time frame, trying to look for a movement on a smaller time frame. Okay, let's go over even to GBPUSD. GBPUSD. Okay, as you guys can see that. So if you zoom out, because you want to do like a top-down analysis, if you zoom out, you can see that the pound has been dropping and dropping and dropping. Okay, so now if actually you draw like a trend line, you can actually see it's okay, the pound has been dropping, and even if you draw a trend line even on this side over here, if you draw a channel, you can see that the pound is actually been dropping. Let's just leave that trend line thing, and let's just turn into a second. Okay. Good. Okay. Now, when you zoom when you zoom in a bit, let's go and zoom in a bit. So you can see now what is a pound doing. What the pound is done is if you, let's mark that over there. With the pound, there was this huge selling momentum over here, and then afterwards there was also another huge selling momentum over here, and also there was another huge selling momentum over here. Okay, so what you've seen, 1, 2, 3, and obviously the pound has been dropping. Okay, the reason I'm saying let's zoom out is because I want you to note this bigger picture thing on the daily. See this over here. You see this bigger picture thing that I want you to see over here. This here is a compression that is approaching what? A level of what? Of demand. So expecting obviously the pound to eventually go up. Okay. So if you're gonna zoom in on that now, on that over there, what do you expect? I'm expecting, because this year is, this is a lower low, this is the low, and this year is FCR, failure to return to where? It failed to return to this level over here, you know. So now what you have, we've got the pound like this moving in this way. Okay, so what I'm expecting the pound to create on this side something like a head and shoulder or quasi-moch on that level. So let's just zoom in on that, you know. So we're gonna zoom in on that. So when we zoom in, just do this, because what is important is when you do analysis, obviously you can like okay, as you can see, so what the pound has been doing. So today, if you go to daily, obviously just stick to, okay, so now we in 4 hours. Okay, so the pound went to that level over there, and yeah, if you can see in the past 4 hours what the pound has done, it has created this double marrow over here, and this double marrow is like at this level over here. Okay, it's almost similar level where you saw the last bullish candle, which is over there. Okay, so first time, second time, and then you have that. Okay, so as you can see, even now what the pound is doing, which is, we're gonna zoom out a bit. Okay, the pound actually made a drop, because this is just a market recap. We are doing recap on what the market is doing currently. I said we're doing a class, but also doing like a recap on what the market is doing. Okay, as you can see, if you draw a horizontal line over there, and you draw another one over there, and then you draw another one over there. Okay, because you're trying to do a bit of market recap what the market has been doing. And then obviously, as you can see, even over that level over there. Okay, what happened here is that the price was actually dropping in the form of compression. What the market maker wanted to do is just collect as much liquid as they can. And if you can see, if you can spot, you will see that this level is almost equal as that level. So that basically gave us a support level. So what happens is that the market, obviously what they want to do is break below those levels. They want to break below, because they have people that are basically have their stop losses below those levels. So that's why they have to break below those levels and collect, you know, and collect more liquidity. Liquidity meaning taking out stop losses in that level over there, stop losses. So got people that have got the stop losses over there, stop loss. So it's a stop loss. Stop loss and pending orders. Okay, pending orders. So pending orders. So stop loss and pending order. What the market is done now, this is like a shift candle. So this candle, as you can see, it's a shift candle. This over here. What you see with this candle, it's just tested that level over there and it came back. Okay. Coming back, where is it coming back to? It's coming back to show everything. Okay. So as you can see, there was a break in the structure. Which structure is that? So this level over here. I'm now expecting the pound. See that, spot that candle. This candle over here. It's important candle. That candle over there. Okay. I'm expecting the pound to come to that level. And then that's the candle where you saw a break. Okay. So a break of structure was there. Where did it break for? It break outside of these things. See what is happening here on the left. This whole thing that is happening here. This whole thing that is happening here. This chaos right here. Okay. This candle break above, close above, and then there was this bullish candle. If you look at that, how is the market approaching this previous demand zone? This is what? You just mark that. This is demand zone, demand or buy zone. Okay. This is demand. Buy zone. Okay. So how is the market approaching that zone? The way it's approaching is approaching in the form of what? Compression. Is not aggressive. What do you expect? We expected. Oh, actually, if you go to M15, give you this. So this is what we call this kind over here. If you don't know it, now you know it. It's what we call a decision point. This kind over here. It's a break, decision point this year. So since moving like in the compression, what we expect, we're expecting the market to come here and actually continue going up. Why is that? Because as you guys can see, this is a structure, demand zone, coming back, break of the structure. Another way thing just to make more point is that, okay, if you look at this and you use let's just remove everything else. Okay, just remove everything else from there. Okay, just gonna draw lines. Just draw to the lowest. If obviously this is another what we call a W. W there. Okay, and then the price break a level, gave us that candle. So we're gonna mark that candle. Remember what I said? It's a rally. So this is what? Rally, base, rally, because the price actually went up. Okay. If you don't remember what the rally is, rally base rally. Okay, then if you take Fibonacci, you mark from that level to that level over there in the top, you will see that the 50 and 61 level falls over here. Okay, the 50 and 61 level falls over here. So that is where we look to, if we were buying something and it comes back to the 51 and 60, that is where we look again for another entry. Okay, so if the price comes back here, we look for another entry for buying again. Okay. Okay, hope you guys are getting this. And obviously there was a break of the structure over here. Okay. So if you're still not sure what I mean about the rally-based rally, let's go over that and just share again. So there's other caps that are important in trading supply and demand. So this is a rally-based drop, and this is a drop-based rally, and this is a drop-based drop, and then this is a rally-based rally. Okay, hope that making a bit more sense. Okay. Okay, so about that, okay. Okay. Let's just do, okay. Let's just do some questions, okay? Do you have any pair that you want us to take a look at? Okay, I think we also had Euro GDP. Euro GDP was also good. I think it's just been playing out very nice. Just been playing out very nice. So I think this year, this was it's a very nice trade. So it's been playing out very nice. We've been holding it. Okay, we've been holding it. I think it's so far, it's one of those trades that is going well. Yeah, okay. And yeah, okay. But otherwise, let's just take some questions. If you've got any charts that you want us to take a look at. And also, I think, what's this? This is Euro AUD. Okay, welcome. Listen. All right. So also, if you take a look at Euro AUD, this is the highest, and this is the lowest. If you look at the 4-hour, and in between, the thing is that is important is that obviously in between you can see this has been dropping. If you zoom in to the smaller time frame, these are the level where you want to trade it. You want to trade here. If you want to sell it over here, as you can see, nice structure, break, come back, then break a level, and obviously that level you can see not been tested as yet, because that level first touched, another touched, and fell over there. And if you obviously, even again, I think we had another trade in the morning for this one here. Yes, it was here. This was the drop we saw. I could say, okay, should be really good. But now, when the price is doing this, when the market is doing this over here, you try and avoid to trade something like this, okay? But if you zoom into M15 and you're scalping it, obviously you will make some money on it, okay? As you can see, if you zoom in, you take that and you do that, you can see it's okay, fine. From there to there, you could have made over 70 pips, okay? So after that drop over there, and then if you want to take a look at this change here, if you want to check that out over here, do that. I want you to take a look at the candles. See here, that's here, okay? Touch, okay? That side over there, another touch over there, important, okay? And then where's another touch that is important? Here, okay? Over there, okay? Important. Okay, so the price came back and we had a new day. So this is basically today. What happened today? Yesterday the price dropped. Why was this huge drop? I think it's because AUD was very strong yesterday. You saw it, so it just went up, and then obviously today it's just been dropping. So after that drop, and then drop, and then it dropped again to this level today. So what was the time here? I think So it's quarter to 9, so around 9, and then at 9:15, obviously this candle, this pink bar was formed quarter to 9, and at 9 you saw that. So this level of demand was for around 9 o'clock, so you could have bought it and you should have made some profits over here, okay, over close to 90 or 100 pips. And you can see that the market is reacting to that over there, which is, like I keep saying, when you see this level, it's gonna react to that, and then obviously expecting a drop. But before it drops, obviously always check, if you're trading Euro AUD, always check what is AUD USD doing. Okay, we're gonna catch up on that. My expectation on this one, you just watch it. Just remove everything. Okay, if you see this from there to there, we're gonna zoom out, and you can see that over there. So still expecting the Euro AUD, because there's that candle over there, you know, that candle. This candle over here, you know, it's a problem. So it might just continue to go on the weekly. It's been dropping, yeah? Yeah, it's been dropping. Even on monthly, it's not really that much convincing. Because even on monthly, you can see there's this bearish candle, bearish engulfing candle, and then there was a retest. So perhaps it might just as well drop up to that level over there, you know. So this is just obviously mean you should be expecting AUD to basically pushing up, you know. Because if you do a weekly chart, let's do a daily chart, you can see that obviously at that level, so they just take that as a high, and the next low is over here, and another low is over there. Okay, what has been happening with this one, and you check that high, you connect with that over there and see the trend line, you'll see what is happening. Okay, and then if you take that level of high, you connect with that, because we're doing a review of what the market is doing on a Tuesday. So, and obviously, you saw that this is a bearish engulfing candle, and it's now on where? On the demand zone, which is that candle, bullish engulfing. So you can see that here is what people call a break outside the trend line, and obviously the price coming back here. Let's just remove that. Okay, so let's mark the levels now. If you mark this level, you can see the price came, drop, same level, came back again, which is, and then it dropped in that level. Okay, just mark that level. Okay, that is basically where there was this drop. So this is significant resistance level because the price dropped over there, came back, dropped, coming back, and now you can see the price. Let's just zoom out. So expectation on AUD USD is this. The price should actually come to that level over there. That level over there. Or you can go further up from there. But if you zoom in to H4, okay, H4, now you have this level, you've got a demand. Also, because you have that over there, which is a bit, you can see, and you have this side. My expectation on this one, since okay, so the market opened on today is Tuesday, and Monday this was the on supply. Okay. This was the on supply on Monday. It dropped. Now it's moving in form of a compression. What do you expect? After compression, the price should drop heavy and it should come back and test previous what supply. Okay, test previous supply. And remember also that as much as we can be, this is also another level of demand where basically we can buy AUD. Okay, that is important for that. So possible is that AUD, Euro, no AUD, USD, what it can do is this. Okay, it can go there and then drop to this level. Then from that level, it can go further up. Okay, why am I saying that? I'm saying that when the market is approaching a demand level, okay, what do we check? Is it moving faster or are we having? So let's just say this is buy zone. That is our buy zone. What do we check? We check compression. So this is compression. It's not moving as fast. It's just moving sideways. If you go to smaller time frame, you can see those. So that is our candle. This is our candle. You know, the last bearish candle before the market actually made that bullish move. What is a bullish move? This is movement going up. So before that move that went up, what the market did was it gave us this candle. So this candle is our candle that we're gonna use to take our buy trade. And another thing, obviously, if you're taking a buy, the first take profits obviously should be here. This was a previous structure low. So this was a low. And as you can see, there's this significant candle again over here. So that candle is another significant candle. Let's just change properties to go, go up here. Yeah, that candle over there. So, and that's the level for the price. This is a previous structure, right? So the price going over there. So obviously, if you're buying from this level, your first take profits should be here. Okay. So that's it for now. I think those are some of the important things that I wanted to highlight. And as you can see, US30 just going up. So when the US30 goes up, most of the time you're more likely to see the other indices also going up. So like your nasdaq will go up, you know, also your see at the breaking of a structure, what it give you, this candle again, price is going up. Previous structure high is that there. That means that's your next take profit regarding the, it will definitely break those because there are a lot of that's like resistance. You definitely break those. That's your next structure. So when this is happening, always expect nasdaq to also go up. Also expect sp500 to also go up. Okay, so obviously sp500 is also gonna likely to go even in that level over there. Okay. Yeah. So that is it for now. I'll try and see and upload the previous session, but otherwise, feel free to ask questions on WhatsApp, and then we can discuss more things